Good morning, people. I have shaved. This was the big news for today. The S&P hit that 4,900 marker, right? I said I would when we were trading the 4,000, so here we are. But good morning, everyone. It's a new week. It's the last full week of April. I don't honestly know how this time flies like this, but here we are. And it's Monday. We're starting it off April 22nd. And let's see what we got in terms of news. Let's see how this thing's breaking down because earnings continue. This earnings period is going to be very heavily watched by many to take into heed the next general move in the markets because everyone's going to be focused on tech. We've had a decent decline in these markets over the last few days. The SPY has printed 1, 2, 3, 4, 5, 6 red days in a row. And typically, when we print 6 red days in a row, there's a pretty high probability that the 7th is most likely not going to be red. But this could be one of those false lower high rallies that we shape up. But earnings are the front runner of what a lot of people are going to be looking at for the next directional move. Keep in mind, we're about like 5-6% off the highs, nothing insane. Some of the earnings and some of the things that we're going to be talking about are Tesla, right? Today, on Tuesday, we have Visa and Tesla that come out with earnings. Tesla is going to be one of the big tech names that's popping up on the week, along with Meta. That's on Wednesday, and IBM. On Thursday, we got some big heavy hitters, the big boys, Microsoft and Alphabet. And then Friday, we've got some energy names. So all eyes are going to be on Microsoft, Google, Meta, and Tesla this week in terms of earnings. And they're going to help dictate what the potential strength in these markets looks like and what the momentum looks like. What are the forward guidance? Are they continuously printing big dollars in these high interest rate environments that are expected to take us higher in this market, right? This is one of the main things that we're going to be looking at this week because if the forward guidance is continuously strong and we see gaps like we saw last quarter in the likes of Meta, for example, Google, right? Meta last quarter, you see this massive gap from under 400 all the way up into 480. Google, I think, had a gap down on earnings last quarter, if I'm not mistaken, but that didn't last very long. Microsoft has been forever strong, one of the leading AI names as well. It's pulling down now a little, naturally, as the markets are down. But a pretty strong earnings period last quarter as well, just continue this upside momentum. And Tesla in the news here has been struggling a decent bit recently with a massive gap lower on earnings and a massive gap lower to start the session. And why is that? So a lot of trouble in Tesla. A lot of news came out that Tesla camp this past weekend from the Tesla camp this past weekend as shareholders brace for a pretty painful earnings report tomorrow. Facing headwinds ranging from slowing demand to rising competition, the EV maker slashed prices in many of its major markets, including China and Germany, following notable price cuts in the United States. So other news recently saw that Tesla missed delivery estimates, lay off more than 10% of its global workforce, announce a Cybertruck recall, and slash the prices of FSD software by a third. Elon Musk also canceled a high-profile trip to India, and Tesla's down more than 40% year to date. Keep in mind, we're about 4 months into the year, and this thing's down 40%, right? 10% a year, if you will. So a lot of people are bracing for a bad Tesla earnings, but we'll see what the other big tech earnings report because they can still sustain upside in this market or downside if they gap down like Netflix. You can see that Netflix last week was the biggest tech name to report, and we gapped down, and that momentum move continued to the downside into the end of the session. So this was Friday. I think they reported on Thursday, if I'm not mistaken. Now, there's some news on the backdrop of weed, ganja, marijuana, call it what you will. It's that time of year again when the budding marijuana legalization conversation lights up at the federal level. It's actually been going on for quite some time and witnessed some momentum in 2022 with the introduction of the Cannabis Administration Opportunity Act in the Senate and the Marijuana Opportunity Reinvestment and Expungement Act in the House. So things continued in 2023 with HHS concluded its independent review with any change in scheduling now in the hands of the DOJ. When state and federal law conflict, the latter preempts the former as per Article 4 of the Constitution. However, the 10th Amendment, as interpreted by the Supreme Court, outlines that the federal government cannot commandeer the state, meaning that it cannot force states to arrest cannabis sellers or users that comply with their own state laws. In turn, states also cannot block the federal government from enforcing their laws. So as a result, federal agents could be dispatched to make arrests within states if there was a will to do so and the resources were available. But in recent decades, sentiment has turned with regard to weed's place in society. The progress is still going, right? The review is still going. White House Press Secretary Karen Jean-Pierre said at her last briefing. So on decriminalization, the president has been very, very clear. He doesn't believe that anyone should be in jail or prosecuted just for using or possession of marijuana. Oregon led efforts towards the decriminalization in 1973. California kicked off medical marijuana in 1996. And recreational weed even became legal in Colorado and Washington in 2012. As of today, pot is now legal recreationally in nearly half of all the U.S., though it still remains a Schedule I drug under Controlled Substance Act of 1970, and the illegal classification makes it complicated for companies to operate within their own state borders, as many business activities and banks are regulated by the federal law, as well as taxes, trademarks, legal processes like bankruptcy. And reclassifying cannabis as a proposed Schedule III substance doesn't mean weed would be legalized, but a step forward in doing so. So remember all those weed stocks, right? There's a weed ETF as well called YOLO, I believe. This cannabis ETF, right? There was a lot of spark in these weed names like a long, long time ago, as you remember that massive boom years ago. I think I was in school at that point where we had these like massive upside moves, and now look at it, it's in the gutter realistically. So every time we talk about or it comes up as a subject in terms of the legalization or the steps forward, there's a nice little pop in these names, but then ultimately, right, they go into crap. So not that I'm invested or that and enthralled by it, but it's something interesting to see for those that have positions or are looking for positions in that. The last thing I want to talk about before we take a look at the S&P 500 here, national security. The U.S. House of Representatives on Saturday voted 360 to 58 to approve a bill that would force Chinese tech giant ByteDance to sell a popular video platform TikTok or face having it banned in the U.S. app stores. The national security legislation extends the timeline to 270 days from 180 days and allows President Biden to extend the timeline by another 90 days. And it was also passed alongside a $95 billion foreign aid package in support of Ukraine, Israel, and Taiwan. I know a lot of people took to Twitter after they saw that, outraged. The measures now head to the U.S. Senate and are expected to pass this week, so we'll see how that unfolds. As TikTok has been creating a lot of content creators that actually generate a fair decent bit of money from the platform in itself. So it's going to be interesting to follow and see how that kind of shapes up. And let us take a look at the U.S. equity market, the S&P 500, to start the week. As last week we had sell-side turmoil Thursday overnight, massive downside move only to get rebid and then sold off on the Friday session, where you saw us go live and rant at the end. We had trades, we had talks, we had everything. So that was a pretty eventful Friday last Friday. It was pretty fun. I enjoyed it, made some money, and also had a good discussion all in all. So today, as it stands, we're accepting into higher distributions. We're in the middle band of the three of the triple distribution right now, and we're holding above that 5,000 region fairly okay, right? The 50-20 is another area that I'd like to see prices hold if there's going to be some bull side pressure. And then if we start moving back above this 50-30, more exaggerated, I think that we can move into the top band of the distribution where we find ourselves in trouble with the 50-55, 50-60 area, where I could see potentially some sellers try to hold this out. Should there be acceptance above that, I think that we're going to have a pretty strong Monday trend day that leads up a little higher into that 5100. But under this 50-20, things get dicey. Buyers are not out of the woods yet. Even one green day doesn't mean that they're out of the woods. We'd have to see a very strong recovery bounce and changes in structure for that to be the situation. Even though that can happen and probably will happen to begin this week, I think that there is the potential to create a lower high and peak prices a bit lower before we find those more confirmed bottoms. So I'll leave off with that. We'll open our live trading room here with our team. I'll see you guys in there, and we'll update tomorrow as to what we saw in these markets and how this transpired. So thank you, everyone. Enjoy the rest of the day. Have a great week, and let's start off trading a little smaller. We'll be trading just